All right. Check, check. We are live here. Welcome, everyone. My name is Nick Hiersche. I am the president and founder of the Mortgage Calculator. We are a lender that specializes in doing loans of a different nature, typically our non-QM loans, which we'll discuss here in a minute. I'm joined by my co-host, Jose Gonzalez, our sales manager with 27 years of experience, and our chief operating officer, Kyle Hiersche. We'll talk a little bit more about how our team specializes in what we do for the non-QM world. But we'd like to take the opportunity today to just go over some rates and just discuss what's going on in the market. So we've built this tool from our custom software for our team in order to check out the rates, basically a quick quoter. Again, this is for mortgage professionals. This is just going to show us our rates for today to just give us a discussion point. So first thing that I'm going to do is pull up our conventional rates, which obviously most people are interested in. So I'm going to pull up this scenario here for a $400,000 loan amount, 80 LTV. Conforming means conventional in this case. Purchase for a 30-year fix for a primary home. Single family, we use a default Florida, Miami-Dade. That's where our office is based. And just for talking purposes, obviously we're going to put an estimated FICO score of 760 and an estimated debt to income of 40. And obviously United States citizen. So those are going to be our parameters here for this quick quote. So I'm going to go ahead and click show rates and we'll just see what the marketplace is offering today. So these are going to be our rates that we can get with any of our loan officers. It's going to pull up our estimated par rates or no cost rates here. So you see for no discount points, so no points or fees on our end besides our standard fees. We are offering right now a 6.5% rate for this specific program. This is a conventional program for Home Possible. A lot of like first-time borrowers and whatnot qualify for this program. Let's scroll down a little bit to see the regular programs. So these are for specific borrowers. And here we'll see our conforming 30-year fixed for people that may not qualify for the area median income that's required for these specialty programs. So the conforming 30-year fixed right now, right around 7% with no cost, of course. So those are great opportunities for our regular primary borrowers. Now, let's go through a couple different options. If a borrower, let's take this back up to 80 LTV, borrower doesn't qualify for conventional, or perhaps FHA may be needed for a low down payment, maybe for like a multi-unit property for someone who's just buying their first home and wants to purchase something multi-unit in order to offset some of those costs. We would typically use FHA program, which allows us to go higher in the debt to income ratio. Let's go ahead and lower this loan amount so we don't hit any FHA maximums. And we're going to keep everything else the same. Purchase, 30-year fixed, primary home, single family in Miami-Dade with an estimated 760 FICO. Let's go ahead and look at the FHA rates at this point. So FHA is a little bit cheaper here. So 30-year fixed right now for relatively no cost. This is our closest to zero cost as we have on this estimate. That's what pops up first. 6.625% rate is going to have a 7.5 APR. Remember, with the FHA programs, there are monthly mortgage insurance and even an upfront mortgage insurance premium fee, which is listed here as a FHA funding fee, which is part of the cost in order to attain that loan program. So we typically see a little lower rates up front, but keep in mind there are some extra fees for FHA. So it's a great opportunity to use that when you need it as a great tool in order to qualify where you might not be able to qualify. Now let's go back and look at a couple other programs. People love to check out the rates on some of the other government programs. So if you're a veteran, we appreciate your service and you can qualify for some additional programs. Let's just set this all the same just to take a look at what the VA programs are going for today. Purchase, 30-year fixed, primary, same place, same FICO. Let's just compare these side by side. So our VA 30-year fixed rate, great rates here, 6.625 for no points at all. And of course, there are some extra fees there. So for the VA, but they're great opportunities for our veterans to purchase homes, and they even go up to 100% LTV. So VA are great popular programs, and we love to support our vets. Let's go back to the quick pricer and pull up today's rates for USDA, one of the last government programs here to go over. And we'll slide this up to 80 LTV. Everything else is going to stay the same again for our scenario. And let's see what the USDA rates are looking like. Remember, USDA is only valid for properties in a rural designated area. So these are based on property. So right here, again, around a 6.625 rate is relatively no cost here for us for our regular USDA program. And again, there's a couple fees that come with USDA, so always watch out for your APR there on the USDA programs. Now that we've gone through all the regular stuff, let's talk about what makes our team special. So here at the Mortgage Calculator, our team loves to specialize in non-traditional mortgages or non-QM mortgages, as they're otherwise known. So to access our database of non-QM loan programs, we simply click on expanded guidelines. So that's going to be guidelines that exceed all of the other programs we just discussed, right? So a lot of people know conventional generally has a certain set of guidelines. So does FHA, VA, and USDA. We talked about USDA has property-based guidelines as well as qualifications. So does VA. You have to have served in the armed forces to qualify. And FHA, you still have to meet DTI requirements in order for the FHA programs. Now, to go beyond all of those guidelines, we have our expanded guidelines programs, aka non-QM. And to compare those, let's go ahead and slide this up to a similar 80 LTV purchase, 30-year fixed, primary, property type, single family still, everything else the same, 760 FICO, debt to income 40. But let's go ahead and compare our non-QM programs using alternative income documentation. So now we can actually switch this income to from a regular full doc, which all of the traditional programs are, to now we have all of these other options. We have 1 year of documentation in case someone maybe didn't have a great 2 years ago during the pandemic. We can use 1 year of documentation for this. Same thing with asset related. Same thing with bank statements. We can do 12 months or 24 months in case 1 year is better than another. Investor DSCR we'll talk about in a little bit. We can use personal bank statements, 12 months, 24 months, most popular. We can also use some other various programs here, but the most popular program, especially for a primary purchase, we do this a lot here in Miami. We have a lot of great entrepreneurs. We love to work with entrepreneurs, realtors, otherwise people that are self-employed. So we're going to click the self-employed box here. That's going to allow us to use these self-employed types of alternative documentation, which in this case is going to be personal bank statements for 12 months, which we'll use to determine a debt to income ratio for that borrower who may not fall into the traditional programs. So let's check out these rates. Remember, these are non-traditional mortgages, so the rates are always going to be higher, but they're great options for borrowers who would otherwise not qualify. And that's what we really love here, is to specialize in the underserved borrowers when we're working with them. So you see here, we have a few different banks and investors that work with us in order to offer these programs. So you'll see if we scroll down here, there's a plethora of bank statement programs. Since these are very specific, you definitely should get with one of our loan officers in order to navigate which program fits best for you. Certain self-employed borrowers have certain situations where certain lenders and certain programs and certain banks are going to be better. So that's why we love to have so many programs available for our borrowers and our team. So you can see here, some of the non-QM alternative document, 30-year fixed loans, everything else the same, are going to be a little bit higher in rate, typically around 2% higher is what we're starting at right about here compared to what we were looking at for conventional. And they vary greatly, right? There's going to be some options here for no points for relatively par rate, no cost here at 8.875. But if for some reason you don't qualify for this program, we still have other options. And there's all kinds of different options here, and they vary from about 8.875 right now up to about 10 here, it looks like, for all these options. And again, you can always buy these down into lower rates, but these are what we call our par options that pop up first. Now, before we go on to investment products, let's check out a couple other popular programs for the non-QM. So I'm going to pop back into my pricer here. Let's pull this up to 80 like we've had it for all of our examples. And let's pop into expanded. And one of the other more popular programs we have here are asset related. So someone who may not be employed at this very second, maybe they do stock trading and they're not a traditional type of employment, we can actually use a large asset account to basically deduct an income from that asset account should that borrower have to use that large asset account to pay their monthly payment. So we're going to use their $1 million, $2 million in retirement or whatever savings or whatever kind of investments they have. As long as it's an asset account, we can then infer a debt to income ratio had they had to exercise and utilize those assets to pay the payment. So everything else is going to stay the same here. 80 LTV, purchase, 30-year fixed, primary. But this is going to be for someone who doesn't necessarily have to be employed at this moment, but is going to use an asset-based account to determine their debt to income ratio, which is a very unique way to get people into homes who may not otherwise qualify. Let's go ahead and click show rates on our asset related programs, also called asset depletion. Basically, we're going to infer a ratio based on that asset depleting over time. So you see here, similar, we have 8.75 as a par rate for this program. And there's a whole plethora of programs that go in between 8.75. Now here's a 7.99, but obviously a large cost there. So a lot of different variations within these programs that vary from about 8% to 10%. So again, these are very specific programs. You don't qualify for this one, no problem. We have other banks and investors that offer this program and this program and this program. So get with one of our loan officers here at the Mortgage Calculator in order to determine which program might be best for you. But if you don't qualify for conventional, these are great opportunities to then still purchase a home and basically purchase your new primary home. You can also go over the loan limits and other things. There are other advantages of expanded, which if you speak to a loan officer, you can get into. Now, before we cut off today, we try to make it pretty quick here, but let's go through some investment options. Everybody, we love to serve investors. That's very popular. We do have a lot of investors looking to do short-term rentals and other things like that, super popular these days. So we find that most of our quotes are actually going to investors. So let's check out some investment property purchases here. Let's go at 80 LTV, conforming purchase, 30-year fixed, but for investment, everything else is going to be the same as all of our other examples. When we do investment, obviously for non-QM, there's a prepayment, but for conforming for regular loans, there's obviously no prepayment. So we'll stick that there. And we'll click on show rates and check out what Fannie Mae and Freddie Mac have available right now for our team for conventional investment property purchase. So you see here, FNMA stands for Fannie Mae, FHLMC stands for Freddie Mac. So here's our rates here. It looks like there's not necessarily a par rate here for an investment property. That's typical because Fannie Mae does have a large loan level price adjustment that they charge. So Fannie Mae and Freddie Mac both have the same loan level price adjustment they charge for investment properties rentals, right? So right here, we're seeing a 7% rate, but a large cost here. So between 7%, and if we go up in rate, we might see some lower cost options. You see, we have tons of different banks and options here. Obviously, you probably won't want to pick that, but there's a low cost option. But you see a lot of different varying programs here between right around 7%, but are costing around 3 points, it looks like. Usually our top result is our best result. Our system automatically determines which is going to be the best bang for the buck. So this is typically going to be your best combo, 7% rate with 3 discount points. Now, what is even more popular with our investors right now is a program that we love to use for investment purchases, because obviously FHA, VA, USDA aren't eligible for investment properties. So we can either do conforming or we can go to expanded. And this is where our team shines. This is what we love as the non-QM programs, specifically for investment properties. So some great opportunities here. Let's go pull everything equal here to 80 LTV, purchase, 30-year fixed, investment. And we're going to use, as we spoke about before, our most popular non-QM program that most people understand is typically bank statements. In this case, let's go business bank statements, 12 months. And typically for our non-QM investment programs, we're typically going to add a prepayment penalty. This is going to help offset some of those costs because this is an alternative program where the rates and costs are going to obviously be higher than conventional. So in that case, for our demo purposes here, I'm going to put a 3-year prepayment penalty. And that should give us some great options here. Let's go ahead and click show rates. Oops. I got to do that all again. Sorry, guys. You have to be self-employed to use your bank statements. So let's go back to bank statements. We're going to make sure we click self-employed in this case. Everything else is going to stay the same. Investment, 3 years. And let's see if we have a better result this time. As you can see, the rates are live. It doesn't work if it's not an eligible program. All right, so here we go. Some great options to purchase. And most of these non-QM options, if not all of them, allow us to purchase properties in an LLC. So it's very popular with our investors that want to still get some great rates besides, hard money and commercial alternatives. they can use their alternative documentation and still get a rate of 9.375 for relatively no points here. So this is our relatively par rate on a non-QM using bank statements investor purchase for a rental property. Now, there's a lot of great options if you add income, and you guys are all used to that. But what really gets us excited and our investors excited are our DSCR programs. So let me talk a little bit about that. Under expanded, let's go to 80. Let's go to investment and our income verification investor DSCR. This is the most popular word right now in non-QM and in mortgages in general. This allows us to use a debt service coverage ratio, basically use the rent of the property to infer a debt to income. There is no income from the borrower or from the business. In this case, this is an investor loan. Typically for a business, these are business purpose loans. They're going to use the rent from the property to cover the loan, has the ability to repay. So these loans do not require any documentation for income from the borrowers, and our investors really love this stuff. We typically do a 3-year prepay. You can even do up to a 5-year prepay, typically on those investment business purpose loans. But for this purpose, let's go ahead and do investor, 3-year prepay, everything else staying the same as our example before. And we're going to see some great options with rates that are similar to what we just saw with income, but totally not needing income, right? So this saves our borrowers a whole bunch of time, effort, and really the qualification purposes. Sometimes you cannot qualify, to whereas the DSCR is pretty straightforward, right? The property has a rent value. As long as the rent covers the payments, that is a good to go loan. In this case, this program specifically needs the rent to cover by a little bit more than 1. This program needs it to be between 1 and 1.24. And we even have programs, if you scroll down here a little bit, more expensive, obviously, but there will be some programs for an under 1 ratio. So under 1 would mean that the rents don't quite cover the PITIA for the purposes of paying the loan. So a lot of great options that we have, all the way from a 9.625 for relatively no cost, and up into some other programs that do have other guidelines. Remember, Get With a Loan Officer here on our team. All of these programs have very specific guidelines. So sometimes a property won't fit one, but it will fit another. So a lot of great options we have here that do not require income for our investors to purchase rental property. These are probably our most popular rate quotes right now at our team. So if you're interested in purchasing rental property, or specifically a short-term investment rental property, these are great options because those are business purpose loans. These are great business purpose commercial mortgage products to get investors into homes quickly and easily without the income documentation typically needed. So that's basically it for the quick pricer. Let me go ahead and stop my screen share, and we'll just talk for a couple minutes here about some of the programs. So Jose, can you explain a little bit more about the DSCR, since that's what everybody is so excited about right now on our team?
Yes, amazing program that basically works like hard money, but offers many more positive features, like a 30-year fully amortizing term. You can choose an ARM, but there's really no benefit to an ARM right now when the 30-year rates are tracking lower than the short-term rates. So DSCR, debt service coverage ratio, and the most amazing part of it is not only does it not use or not require any personal income nor employment verification from the borrower, as you mentioned in your presentation with the rates, it does allow for funding of a loan even when the rent does not fully cover the housing payment. So that is a perfect scenario for short-term rental property that may be being purchased for a premium because it is generating such amazing income, and for whatever reason it may not cash flow with long-term rent, even though we do have solutions for our short-term rental properties where we can use the short-term rental income. But for those far and few cases where that is not going to be possible, we do have the programs that allow you to close with a debt service coverage ratio below 1.0. Or for a property that's not short-term rental, they're loving it, they're going to stay there every now and then, It's sort of like a trophy property with benefits. You know, you can have it there for whenever you want to use it, and you can rent it out when you're not using it, and you can still get it financed, which is an amazing thing for our foreign nationals, as well as our many snowbirds that are very prevalent, especially this time of the year. We are disclosing many loans, and for MLOs, it is an amazing product because, as we always mention, we get those multi-packs, the investors that have multiple properties that are transitioning from cash or hard money to DSCR. It is the perfect solution to put more money into their pocket. And of course, we have no seasoning options. Close on the property yesterday, and as long as your name is on title, we can refinance you today at current market values. Really, really important, because we have a lot of those investors out there scooping up great deals. And, you know, I just picked up a refi right now on an investor who was being told by the financial institution who she just fired that she needed to wait 6 months to be able to refinance out of a fix and flip loan that was due in 6 months. So they were going to make her wait basically till the loan was expired to refinance her. So unfortunately, we didn't get to her in time on that one. So she put the property for sale, but is now very excited that we're going to refinance her out of a couple other deals that she has. So it's not just a solution of income, it's a solution for a lot of things, especially fix flip, where you're transitioning and you need no seasoning options, where Fannie Mae and Freddie is 1 year to give you the full market value on a cash out refi. With the DSCR, it's 1 day. So get on the trend, on the DSCR trend, whoever may not be on it, because otherwise you're leaving money on the table.
Beautiful.
Absolutely.
Nicole, you just want to go over how our loan officers can help?
Yeah, absolutely. So we have over 345 loan officers. We can do loans in most of the states, especially with the DSCR and the investor products. So whether you're looking for conventional or some of the non-QM personal stuff, or looking to do some kind of investor product like DSCR, keep in mind, we have some DSCR programs that have no investment experience requirement, right? So even those of you who maybe just purchased a primary, or maybe even sold your primary, whatever the case is, we have a lot of products where we can still get you an investment property, even if you have zero experience as an investor, with no income verification, no job employment verification, all of that stuff we don't need to deal with. We just need to know, does the property cash flow? If so, let's go, right? I do want to make a mention that the rates that we went over today are, of course, only indicative of today's rates, right? December 20th, 2022. Definitely want to mention our, company NMLS number 2377459. So just want to do the little disclaimer there. Of course, we're just going over the rates for today. But when we work together, when you reach out to work with us, we'll go ahead and have one of our loan officers send you an actual quote for the exact situation that you're looking to do, so that they can help you out with that. So definitely reach out to us. Let us know if you need anything. You can email us, info@themortgagecalculator.com. That's info@themortgagecalculator.com. And we can get you over to one of our experienced loan officers. Remember, our loan officers don't just do conventional loans, right? We also do all these non-QM products, these investor products. So our loan officers take it a step further than the average loan officer who just knows how to do Fannie and Freddie. Our loan officers are equipped with the knowledge and the tools to be able to go above and beyond on these programs that are outside of the box for you. So with that being said, we thank everyone for tuning in. Thank you, Nick. Thank you, Jose. And we will see everybody tomorrow, 10:30 a.m. every single day. We're going to be broadcasting these rates and talking about our different programs.
All right. Thanks, guys.
Everyone have a great day. Thank you.